We want to thank you for joining us tonight. I'm Todd Kuntz. We are watching your money tonight. Wall Street chalked up another day of losses. The sell-off began at the opening bell and picked up momentum throughout the day. The Dow closed down more than 390 points. It was the third triple-digit loss of the week. Now, once again, the trouble started in China, where trading was automatically halted after stocks fell more than 7%. The market had been open for just 30 minutes. Chinese regulators say they are now suspending their circuit breakers they installed since they might be adding to the sense of panic.
If things slow down in China, the fear is that the rest of Asia will slow down, Europe slows down, and that naturally the U.S. economy will also slow down.
Eyewitness News reporter Chelsea Brensel looked into what this really means for us. Chelsea, a local financial advisor, I know you talked to that person today. They told you despite this decline, there's still some positive out there to take away from this. What would that be?
Well, Todd, that is what he told me. People who are getting ready to retire should not be exposed to the current risks on Wall Street, but for those who aren't retiring anytime soon, this is a great opportunity to buy in. Low, lower, lowest. Not terms you want to hear when talking about Wall Street. But as we know, history repeats itself.
You should only put a certain amount of control in Wall Street's hands.
Financial advisor David Schofield says it's easy to freak out when stock prices drop, but you still have the power.
You can control your outcome financially more than somebody on Wall Street can, right? Planning is so important.
Schofield says we should always be on top of our finances.
We don't know what the markets are going to do, but we do know when we need the money, right?
Right. Timing is everything.
Position monies based on time frame. So if somebody has a short-term need, they're going to be more conservative. If it's in a mid-term, so like a 2 to 5 year time frame, then we can be a little more aggressive. And those that are out, 5 to 10 years or longer, then we can be more aggressive in those accounts.
People tend to become emotional when it comes to money, and that isn't a good idea.
Rather than make an emotional decision that will actually wipe out those accounts, because until you actually sell a position, you haven't lost the money.
Schofield says it's best to talk to a financial advisor about your investments, and it's never too soon.
Young people need to start saving, for sure. It's very comforting when I sit down with somebody nearing retirement and they have the means to retire.
Schofield also says it's important to diversify your investments. Don't just count on the stock market to make you money. Live in the studio, I'm Chelsea Brensel.
Okay, all good advice, Chelsea. Thank you. Wall Street is hoping to find some comfort in tomorrow's labor report. Signs point to another uptick in hiring, which would indicate that despite the turmoil overseas, the U.S. economy is still on track.